Hey everyone, Joe Innovate here. Just wanted to go over something I've been asked about quite a bit lately was my levels that I have. I call them like market auction levels, and basically the premise behind them and kind of how I came about them. Um, I guess the first thing I saw is like market auction theory is basically the theory of how price moves. And the easiest way that I was able to come up with explaining or bringing it about is basically how price moves from value through exploration to find more value. So it's pretty much, the concept of balance through imbalance to balance, or range to trend back into range, consolidation, exploration. They all kind of fall intertwined with each other. So it's kind of why I have here imbalance, low value trend, exploration, and then you have your balance, value, range, and consolidation. They all typically mean the same thing. All right. Um, so depending if you're utilizing like volume profiles, you'd be looking at low volume nodes, high volume nodes, balance to imbalance. Balance is when you have a balanced profile. Imbalance is when it moves away from that balanced profile. All right. Range to trend, same thing. You have a range, and then it's trending. Consolidation, exploration. All right. So if we're just looking at it, let's see, right here, rectangle. So we have our range there. Then we shoot on down, and we have another range here. Okay. Now, the way that I like to look at it is okay. So we have these areas here, and you have your ranges here. Explored, came up here, came back down, created value right underneath this value area here. All right. Every time price goes and it creates value, there is a price level that's going to be the most contracted price within this level. All right. So if we were to take, say, a volume profile, and we put it here, let's bring it, let's do it this way. All right. So get across the range. Actually, it's going to bring it across this whole range. This price here is the most concentrated price, contracted price that was in this whole range here. All right. Balance. Look at the profile. It's balanced. Okay. You want to bring it to a closer portion of the range. Bring it to the one up top. Okay. That's there and there. And open it up. Bring it in. And we have another range. Let's take this out of the way. There's our range. And we have a balanced profile. All right, so range, balance, value, it all flows together. All right, so we had our balance area, which is right there, created a range. There was a nice value, because it was nice and balanced, and that was just considered a consolidation. When it explores out, you have your exploration or a trend, which from a range, you get a trend. All right, then it means going in here, you're not finding much value. Okay, the value is here, the value is down here. So let's open up this profile. Let's see if we grab it here. So it's going to be tricky now. I'll just grab another one. All right, then let's see. There's a value area here, and then a value area down here. Low volume. right where this is trending. All right, there you go. So there's your low volume nodes, high volume nodes, high volume nodes. All right. So when I was able to understand that they all pretty much meant the same thing, and it's coming into market auction theory, is you want to find value. Well, value is going to be within this value areas. I ended up taking it a bit further, and I used to go into doing weekly profiles, monthly profiles, and after a while, I was like, I'm seeing them and they would work and things would be great. It was a nice process. And then once I decided after doing all of that, this is rather easy, guys. All right, take profile. Say right now we're trading all above this 18,500 level. Mm. I can say, I draw a profile over the whole thing. Now this is a daily chart. Profiles don't matter if you're on a hourly chart, weekly chart, monthly chart. They all have the same profile because volume will stay consistent throughout time. Okay. So if that being the case, we have this profile going here. We see the POC here. Let's do this. I'll pull it down a little bit more. Okay. Now let's get to where we're closer in time. We do have the hourly chart up. Let's see. Where are we on the hourly chart? What's time? 21,500. Okay. Let's get up to there. There we go. All right. So 21,500. So we're right around this area here. All right. These lines, I'm not sure what I had these for, but what I would typically do, any more of those? There's one. Okay. Get my crosshairs up just so I can see the level lines and horizontal line. See this high volume? We're at 562. There's one there. Right here, 648. Just don't want them too close. What you want are the ones that are going to be the most dynamic where you see things. Let's see, right down here, there's one there. All right, right there, one there. All right, so this is a little congested here. This right here is a good spot here. So we'll look by 21,950. All right. After I get these here, we'll look at how prices actually reacted towards these on the charts. And you'll see that price actually, considering this is the highest price that was actually traded, that is the most agreed upon price level. So if it's been the most agreed upon price level, that's where the most value is. Therefore, when price comes back to it, it has memory, and price will react at that level again. All right. Um, so we're right there in this area here. We have this here. Let's see how that one. I like to, like, once I get them here. All right. So this is right there. I would actually zoom in and you tighten them up and get them to where they're exactly where you want. All right. So now we're here. Make sure I have these for all charts. Yep, all charts. Okay, beautiful. So now that this is on all charts, we're here. Let's just jump to our hourly chart and right to 100 area. All right. Here are our levels. And you can see price got to this one here, it hung around, it came up. Guess there might have been another one here, but you can see right here it hit, right down here it hit, came back down, came back down again, came back up. Might have been another one down in this area. You can see it as we're going through here. Let's take this 60-minute. Let's go to a 10-minute chart. See how it's just reacting? Came back down. We hugged this level, came right up, hit this one, pulled back, came up, hit this one, came back down. We went around here. We oscillated around here, came down to this level. You can see how dynamic and reactive these price levels are. All right, as you're looking through, and it's really a simple process into getting levels. Now, if you have other levels during the day that you're looking at, like overnight open, overnight close, you'll see that these levels will be pretty close to those levels. And that's why I like to use these as targets, considering we already understand the process as to why these levels are there. And you have the overnight open, that's great. I would target this when it's right next to the overnight open, or whichever one comes first. It's pretty much that simple. All right. Look at the levels. They are very dynamic. All right. And that is it. It's really not that hard. Grab the daily chart, throw a profile over all the price action that was there. Zoom out at the high volume nodes, at the POCs of them, I guess you could say. Throw a line. All right. And I've been doing this for quite a while, and it's just the same thing. You know, it's really pretty good. So look, 127 to 170, a nice little 50-point move, and you see it goes right to it. Pulls up, it came all the way down to this. Um, and that's pretty much it. All right. Hope you guys enjoyed it. And this one wasn't a long video, but since you guys have always been asking me about my levels, I figured I'll give you the explanation as to how I came up with them, my understanding of why they work so well. And it's all because the most concentrated amount of price that's been traded at that level, price is always going to get drawn right back to it again. All right. And we see a lot of them. This is at '04, but at 2200. Some are at whole numbers, some aren't. Doesn't really matter. We're going by the fact that price was traded at the highest volume at that level. Therefore, that contract price had been traded the most, therefore making it the most uh, attractive price at that level. Okay? All right. And there we go, the profile that we had earlier. And this is where, oh, so we drew this profile, and you see these aren't hitting those levels. That's when I was doing the weeklies and monthlies. I was noticing that. I was like, why wouldn't they be hitting the larger levels? because there's more price further in time than there are in these newer levels. So I do utilize profiles on my 5 hour. This goes for the week and then for RTH because that gives you more dynamic as to where price is going to go. But at the end of the day, these levels are beautiful. You see, this is where this range was. The POC of that range, right at that level. All right. If, so, all right. Hope that was able to help you guys, and I'll catch you guys in the next one. All right. This is right here. All right.